Hello, friends. So we have seen inflation coming back in recent months. This time, it is mainly contributed by food inflation, which normally central banks are not very worried about because there is a seasonality factor, unless it is getting generalized, and that is when they take action. If we talk of India in that context, Indian inflation is quite well placed. CPI is 4.8. It is mild uptick, but still in the tolerance range of 4 to 6% of RBI. In the growth fund front, we are doing quite well. In fact, even World Bank recently upped our growth target from earlier 5.9 to 6.1. That makes India one of the fastest growing economy. We have seen rains being quite well. So far, in fact, the reservoir levels in 146 major reservoirs is above their last year levels and also above their 10-year average, which augurs well for Kharif crop, and which should also cool down the inflation. So under that backdrop, I think RBI has very little reason to be aggressive in rate hikes. But at the same time, when we see outside India, we are seeing all other major central banks like Fed, ECB, looking to raise rates even further from here. Uh, and that is very unique this time, that while they are raising rates, both bond markets and equity markets have done quite well over there. I think the answer lies to that is that while they have been hiking rates and they are at you know la- uh, at recent highs, actually, if you look at the liquidity in the system is still above pre-COVID levels. So I think that is influencing the market. Until it does not get settled, you will not see a major risk of happening. And also, if we look at from the Indian context, we are also seeing that there is some amount of uh, you will not say decoupling, but the correlation between India and global is reducing. And our correlation with the US per se, has decreased to what it used to be pre-COVID level. I think that is also a sense of that India is becoming a larger and stronger economy. That's what is getting reflected by, if you look at rupee forward, which used to be trading above 4% for 1 year forward, now it is around 1.5%. Of course, there is an interest rate differential which plays a role in that, but I think still rupee is suggesting that we are a better economy than what we were. Also, with the earning season, which is almost there to end, we are seeing margins getting mean reverted. That's an encouraging trend. In fact, at many places, the results have exceeded the expectations. That opens the window of increasing the earnings estimates from here, and that should support the market. At the same time, I think if you look at from the fixed income point of view, while we are not anticipating uh, rates to get cut from here, but we are not also looking at rate hikes, which makes that middle part of the curve quite attractive from medium to long term perspective, because that offers a right accrual, as well as in case of rate cuts, we will see decent mark to market impact over there. So I think overall Indian markets look good both from the fixed income and the equities right now, and I think we have a policy in this month. I think let's see how RBI goes about it, and I think that will also set the clue for the uh, near term, and we will discuss that maybe in our next month video. With that, thank you very much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.